Thank you very much, Jason, and good morning to everyone. I really wanted to thank you for taking your time out today. I know a lot of you, it's a long trip. I've spoken to some of you from California, other ones from uptown, about the same travel time, but it's very much an honor to be with you today. I'm excited to share with you today the progress that Keysight has made. But first, let me just tell you a little about myself. For some of you, I saw some new faces out there this morning. I've been in the industry for 34 years. 26 of those years I've spent with Keysight or its predecessor companies, which were Agilent and Hewlett-Packard. I've had a chance to help revamp the oscilloscope business and double that business on the top line and bottom line. And then Jay Alexander took it to the next level, which you'll hear more about today. Then after that, I had a chance to change the business model in Keysight when it was part of Agilent and move it from approximately 5% operating profit for the first 10 years to approximately 18% profit for the 8 years since then. And my last role before joining Keysight was President and Chief Operating Officer of Agilent when we decided to split the company. But today we hope to give you a much better view into the company. You'll learn a lot more about the business, and you'll also learn a lot more about the leaders. I feel we have an exceptional leadership team. We've made a lot of changes over the years, and I think the team you will find very, very impressive. These are the 6 messages I plan to drill into today. First, we have a long track record of technology leadership. This goes back over 75 years. The business that Dave Packard started in a garage in Palo Alto that started Silicon Valley was this business, the electronic measurement business. And it has reinvented itself many, many times over the last 75 years. And the reason why I think it's important is not because we were part of HP, but it shows the DNA of the company to continuously be on the leading edge of technology. There are some times when we've fallen behind in a couple of areas, but then we've caught back up. And overall, that's why we're #1 in most all of our markets. Second, we have an exceptionally sharp leadership team. They are not only smart, not only sharp, but they're very, very action-oriented and very passionate about the business. They're not in it for a year or two, but they're in it to transform this business and have spent most of their careers with the company. Third, we are aligned to key growth initiatives. We have taken a lot of time to really understand where the growth is much greater than the overall market growth of 3 to 5%, and we have pursued those opportunities. A good example of that is 5G communications, which you will see not only in your handsets, you'll see them in cars, you'll see them pretty much pervasively through everything in the world over the next course of years. On top of that, there is automotive electronics, and I feel that that also is another tremendous opportunity for us. Now, not just any electronics, but high-value electronics. As you look at the automobile, it is moving from an electromechanical device to a device that is basically a supercomputer with a battery and a lot of wireless sensors. And the wireless sensors look, and they have radar in them, so you can keep the right distance from other cars. It can measure distance of cars that are on the side. And in the blind spot, there's communication that goes on back to base stations and eventually communication car to car, so there can be autonomous driving. All of those capabilities are made possible through wireless technologies. And the #1 wireless test company in the entire world is Keysight Technology. So we are being pulled into this, and that's why you've seen double-digit growth for the last 5 quarters once we've started with our investment in that area. Another key difference that you'll see from when we were with Agilent, when we were with Agilent, we had a role which was more like a cash cow. And that was the right thing to do. The life science business was growing gangbusters, and it created a lot of value. It created roughly a $20 billion market cap company, and that's fantastic. But now, as a separate company, we have a different role in this world, and that is to also create profitable growth. And we invested early, and we invested adequately. We took our R&D percent from 12% to 13% to 14%, and now with the acquisition of Ixia, up to 15%. And that is giving us enough capability to make sure that we can stay on the leading edge. We not only are investing more, but we're investing earlier. So in 5G, when we decided to launch the company, we decided we will be #1 in 5G. And we invested then, even though dollars were not coming for a couple of years. And right now, we believe we have a very strong lead. If anyone was in Mobile World Congress last year, you will have seen that we were in 8 different customer booths that really are the market leaders of the industry. And if they want to find out whether or not their products are working properly, they call on Keysight. And we're well ahead of our 3-year plan, as we promised you 3 years ago. Here's an overview of the company. As you can see, in November of 2014 is when we went and we spun off of Agilent and became completely independent. We have been, in this last year, we delivered 19% operating margin, which is roughly the same of what we did the prior 2 years. And we actually delivered $241 million in free cash flow. The free cash flow conversion is not as impressive as it will be, and that is because we invested heavily in the transformation of the company. Those things are coming to a close. Neil will talk about that more, but that gives us the opportunity to basically have much more free cash flow and be able to generate stronger and stronger returns over time. Our customer base is wide. Just in 2017, we served over 32,000 different customers. And we do that through a dual channel strategy that Mark Wallace, our president of sales, will talk about. And we're obviously spread around the world in over 100 companies and have a $3.2 billion business. And that $3.2 billion only accounts 6 months of Ixia's revenue since we acquired them in the middle of last year. We are split up into 4 main segments. As you can see, communication solutions, electronic industrial solutions, Ixia solutions, which some people call network solutions, and services solutions. The first thing you probably notice is the word solutions. And that is the major transformation that we've made in the company since we've launched it. And I'll talk more about that later. The second thing I'd like to say about Ixia, it is so complementary with our business because that is where the wireless and the wired parts of the network connect together. We've already identified and developed 2 key new products that are synergistic that could have not happened if we didn't have the technology and capability from Ixia and the technology and capability from Keysight. On top of that, we are on track for our $40 million worth of cost synergies. And just by cost synergies alone, we get a return or an ROIC that's above our WACC. But that's not our job. We're going to go much further than that with the revenue synergies. Here is the seasoned management team, and as I mentioned before, I couldn't be prouder of this team. 5 of the players are in brand new roles, and you'll get a chance to hear from some of them during the day. In particular, Satish, Guisun Chai, John Page, Mark Pierpoint, and Mark Wallace, the folks that you see on the bottom row, the presidents of the groups as well as the president of sales. Neil, also our CFO, will be talking with you at the end of the day and pulling together all the numbers and where we're going. Jay Alexander will also give you a brief overview right after me and talk about the technology strategy and the R&D strategy that we have for the business that really has led us to a #1 position, and I believe will extend our lead even further. Ingrid Estrada, who is here with us today, is our Chief People and Administrative Officer. She's taken on more advanced roles over the years. And Marie Hattar is brand new to the company as our Chief Marketing Officer. Will Ingrid and Marie please raise your hands? Okay, they're sitting in the back row if you want to see them at the break. And Steve Williams, our General Counsel, is here in the back corner. Steve, you could raise your hand. Great. Now, there's one other person that I'd like to mention, and that is Errol Ginsberg. And Errol is with us today. Errol is the founder of Ixia and is one who has led Ixia for most of their 20 years. He's an exceptionally strong individual that has unique skills, not only in technology, but in creating a company and growing a company. And he has told us that he will continue to work with us and make sure that the Ixia-Keysight merger is successful. It's off to a fantastic start, but that provides a lot of comfort knowing that the founder of Ixia is fully engaged in our business. And Errol is with us here today. Errol, will you please raise your hand? He's in the back row. Many of you probably know Errol as the president, CEO, and leader of Ixia for so many years. This is a very important slide. This is a high-level overview on how we have changed the company and transformed it for growth. Everybody knows when we were with Agilent, there were higher growth market opportunities in life sciences, so we funded electronic measurements to stay about flat, and then used the excess cash to fund life sciences, and that made sense. But now, as an independent company, we have a chance to go after all of the opportunities that exist in the electronic measurement business. The first thing that we had to do is transform ourselves from being a product-focused organization to an industry-focused organization. At one point, we had 16 different product lines, and imagine 16 different people from Agilent or Keysight right in the beginning calling on one customer to provide a solution. Not very efficient, not very coordinated, and there were even gaps in the solution. We've dramatically transformed our R&D process and our go-to-market strategy, and you'll hear more about that. But that is the single biggest change that we've made, and it's allowing us to win more and gain market share. Second, we increased our investment in the R&D processes I've mentioned, and not only increased it, we made sure we invested earlier in the cycle. Of course, we have more dramatic emphasis on the customer by focusing on industries where we're really providing solutions to their problems. And I'll talk a little bit more about that today, as well as you'll hear from others. We've gone ahead and we've strengthened our portfolio through M&A. Now, one big example was Anite. And with Anite, they had protocol capability with software development, which we said we wanted to enhance as we moved from a hardware-centric products company to a software-centric solutions company. And as we did that, we realized we had some great capability in the company, but we needed to augment that and make that much stronger going forward. So we went ahead and we acquired Anite. A lot of the 5G solutions that we are winning now in R&D, we could not have won without having capability not only from Keysight, but also from Anite. The protocol solutions that look at the physical layer as well as the protocol layers have come together due to that acquisition. We're on track for our cost synergies and we're ahead on our revenue synergies. The second one is Ixia, and I've talked a little bit about that. That allows us to provide solutions across the total communications workflow. And that has been very, very, very successful so far. We are on track to deliver $40 million worth of cost synergies by the end of Q3. And on top of that, we've already started identifying revenue synergies. The market did take a bump when we bought the company. If you look at the peers, you saw a decline in some of the peers in the network visibility market and the network test market. But if you compare our results to their results, you will see we kept up with them or even gained share during that period of time. Now, as the markets start to rebound, we're in a very good position. I will tell you, though, we have a very strict hurdle on the acquisitions that we make. The ROIC must be significantly above the WACC. And that is one measure that we use. In services, we had a plan to make acquisitions to basically buy capability in different parts of the world and then expand it. As we looked at that, the return on invested capital was below our weighted average cost of capital. So although that would have accelerated our strategy, we would have put a big, nice check mark on our services acquisition, we're not going to waste money. We are very disciplined in how we do M&A, and accordingly, we said, we're going to build that ourselves. We can do it much cheaper. It will take a little longer. And since the services business is roughly $400 million out of $3.2 billion in the total company, we have the ability to make up for it, and we have made up for it in our other business. I've talked a little bit about our talent and how we've made great upgrades. So let me just mention a couple of words about our go-to-market strategy. This is how we went to market before. We had up to 16 divisions at one point in Agilent. We went down to roughly 10. But in the past, it made sense because a customer would buy one product. And if you buy one product, one person could go in and take care of that customer's needs. But as signals get more and more complex, they get faster and faster, more analysis is needed, more stimulus into their devices needed, other types of response measurements are needed. That required us to put multiple instruments together from multiple divisions. And when you put multiple instruments together for multiple divisions, that would require many people working with the customer. It's too slow to win in this marketplace because we have to go back and everybody has to look at their plan of record and decide when they can fit in a new project or making some changes. So this is our new organization that we've been operating with. What we've done is created 4 industry groups. As you can see, CSG Communication Solutions Group is a great example. And Satish, being the president of that group, can go into the customer. The customer can say, I need this type of product. I have this type of measurement issue. What product should I get? And I need a little bit of software help to do some customization on top of the software that you have. And I want this bundled, and I want services involved, so I know that these products will be supported, repaired, calibrated. And instead of having 6 people go back to the factory and negotiate, Satish can be right there, say, yes. And he has all the resources to do that. About 90% of what he needs is developed in his Center of Excellence, or COE. If he needs a product that's available anywhere else in the company, he has automatic access to it and automatically prices it and decides what to do with it. So we have one person who on the spot can make a decision for a customer, which is much more much faster and much more productive for our customers. This is the hugest change that we've made in the company, and it has caused us from being with the pack, sometimes ahead, sometimes below, to being ahead of the pack. And if you were at Mobile World Congress, you would have seen a great example on 5G. Let's also talk about what we told you at the last Investor Day in September 2015. It's really important to hold ourselves accountable. That's part of our main values. One of them was we told you we would be first in 5G wireless, and we are. And we just reported last quarter we grew triple digits. Last year, we almost grew triple digits for the whole year put together. In automotive, where we focused, the last 5 quarters in automotive and IoT, we have had double-digit growth in that segment. Design and test software. This is sometimes not understood by folks that are not involved in the industry because we don't have one solution. We have solutions that are isolated for different phases of the development cycle. We have $500 million in software revenue, or over $500 million in software revenue, and we're #1 in the world. But we told you that we would grow that. We grew that 14% since our last Investor Day on a compound annual basis, on a core basis, not including FX, okay, and not including acquisitions, but just the base core. Next, modular. I know when we said we were going to go into modular, some people were concerned because one company had the lead. We said we were going to focus and win because at the end of the day, people buy measurement IP or intellectual property or expertise. They don't buy necessarily a form factor. Now, some form factors, such as a box or a module or a handheld device, are better for one application or the other. But if you don't have the measurement IP underneath that to make the right measurements, it doesn't matter what your form factor is. So we went ahead and down deployed our technology from boxes into modular, and we have grown to over $200 million. And that just includes modular products from PXI and AXIE. We also have software that we sell from older generations of modular, as Keysight had invented modular decades and decades ago, but due to where we were in Hewlett-Packard and Agilent, we did not have the funds to carry on with that investment back then. But we have grown that dramatically, and we have had, as you can see, very strong revenue CAGR since we talked last. And there's a big addressable market there. We believe we will continue to outgrow the competition and take share. In services, we really wanted to make sure that if we did any acquisitions, it returned to us a return above the cost of capital. The multiples out there for services companies, some were fine. We've made 3 acquisitions, and we've made 6 in total, but other ones were too expensive. So we decided to build our own. So we are still going to grow that business to $600 million. It's core on what we do, but it will take a little more time. And John Page will talk about that in a little bit. But you may ask, why is this an exciting place to be? Why would anyone want to invest in this area? And it's very simple. There's a revolution that's going on right now, and we are right at the heart of it. Everything that you see is either turning wireless, whether it was first it started off with your phone, okay, then it started off with, then it went to iPads, but now we're talking automobiles, we're talking of billions of devices that are IoT, that are very, very, let's just say, that proliferate many, many different industries. And on top of that, aerospace defense. We have been working in the wireless market for decades and decades and decades at medium performance and very, very high performance, even beyond the performances that are being used now in the commercial marketplace. And accordingly, this provides us a great opportunity to not only help them with radar and electronic warfare development, but also with security. So what are our key strengths? Why are we going to win in these markets? Well, clearly we're aligned to the key growth trends. We've been known for the execution that we provided, and I think you're very well aware that we have met our guidance 13 quarters in a row or exceeded our guidance. We have proven to have strong operational excellence, and we have a flexible financial structure now that we're independent to do what we want to do. But the big differentiators are our leadership team as well as our people. And if you were there during the California wildfires and you saw how hundreds and hundreds of people chipped in to make Keysight stronger as soon as possible, you would have been amazed. We have a value. We make sure we take care of our people. I think that showed. And people take care of our customers. And it was very, very impressive if you would have seen any part of it. Next, our technology is second to none. We don't go and buy off-the-shelf parts. We have a gallium arsenide and indium phosphide fab on site in Santa Rosa. And those sites go ahead and produce products that are higher performance than anything that exists in the world. If you're going to measure something, you want the measuring device to be accurate. In order for it to accurately measure it, it better be much more accurate. And it's roughly 10 times more accurate, one of our products, than what it's trying to measure. It has to give you that resolution and be much more accurate. That places a level of performance needs that does not exist anywhere else in the world. Third, we're the largest player in test and measurement. We're #1 in our markets, and that gives us a broad portfolio to provide solutions to our customers. And we have strong customer relationships that get handed down from decade to decade to decade. They trust us, they work with us, and they're ecstatic that we are independent and focused on their needs. We have 12,600 employees around the world, and what's important about this is if you look at the revenue breakdown, we cover all regions of the world, and Asia is actually our region with the highest percent of revenue, 44%. So you may ask, where are your people? Are they all sitting in Santa Rosa trying to figure out what China needs? Of course not. The way to win is to create development centers that are close to the customer. So we may create a platform in Santa Rosa and other sites, but then have the software developed and modified for the Asian market in Asia. We sit on standards bodies to define new standards that come out. We work with leading edge customers, and that has provided us success. We've been in that market since 1985. We were the first US company that ever formed a joint venture between a US company and China, and that was what Dave Packard did with our products, and we have taken that and grown it since then. If you look at where our people are, 36% are in the Americas, a very close match, 16% are in Europe, and 47% are in Asia Pac. So there is very high correlation between where we have our people and where we have our business to serve the customers. I'd like to pause and take a minute to tell you about social responsibility. This is something that's ingrained in our culture, and good citizenship is in our DNA. It's the right thing to do. It's the ethical thing to do. Our employees really appreciate this, and this is one of the reasons we have one of the lowest turnovers in the industry, even though we have people all around the world where some countries typically have very high turnover. We do many things. Diversity, we are pushing further. I'm glad to have Marie join the staff. I'm glad to have Ingrid get a promotion and take on more responsibility, but there's more opportunity for us to go forward. So how are we doing? Take a look at the large customers on the left. These are the largest customers in the industries that we call on, and it's not how many have bought from us, ever. These are the people that bought from us in 2017. In 2017, we have penetrated most all companies, top companies in our industries. And now we have the opportunity to gain share and do more. In the center, it lists 47 different companies, and that's also very, very important. There's a long tail of customers. And that's why we don't only serve the biggest, we serve thousands and thousands of customers, and we do that directly and indirectly. Up-and-coming companies that we think are going to be very big will get more involvement from our direct sales force, and companies we think that are small companies and that will stay that way will be addressed by distribution. And if they get large, we'll move them. And what has this provided us? We are number one in most all of the markets we're in. The only large market that's not there is network visibility that we just acquired from Ixia, and we believe that over time we will move that to be number one also. Our market is $15.5 billion, and although we are number one, it's really important to realize we have 22% market share. That means we have lots of room to grow. If that number was 70%, you may say they've got to move somewhere else. We have gone ahead and take product lines like oscilloscopes from 13 to 36% market share when we focused on it, and we've done that with other businesses at other levels. But we have the ability to grow our business with this lead that we have and only 22% market share. So let's talk about how we're going to create value from this business. The first thing we're going to do is we're going to sustain and accelerate our organic growth. We're going to introduce to you today a Keysight Leadership Model, which is different. And third, we're going to have a balanced capital allocation process, which we've always had, but we're in a different position today than we were on day one. So first of all, about organic growth and developing organic growth, we pursue great opportunities such as 5G, high-value automotive, the A to D modernization. We have a history of when we focus on markets, we gain share. We're not only the biggest, I believe that we're the best. We have the best technology, we have the best people, and we have the best execution. And we need to focus to put this together, to make this happen. The third, we're going to differentiate not only on hardware and on measurement intellectual property, but we were also going to differentiate on software and services. We are providing solutions now which provides hardware, software, and what we say is people to generalize what happens. The people provide consulting up front before the sale. They help integrate their systems and sometimes develop code for people in a unique case. We go ahead and we repair equipment for people. We calibrate equipment on a periodic basis to make sure their equipment runs well. We buy back used equipment and make a good return on reselling that refurbished with sort of a premium type of logo on things that are repaired and warranted by Keysight. And we also help working with partners. For folks that want to lease, we work with other partners and use their capital to make that happen. But from a customer perspective, we take care of everything. From what is your problem, to here's a great solution, to committing to pull it all together, hardware and software. We develop anything that's custom, and we support it through the life cycle. And nobody can say that. And that is what is unique about Keysight and why we have moved to solutions. Last, we have close relationships with our leaders, and that's very, very important. Here is the Keysight Leadership Model, and it starts all in the middle with customer success. Customer success helps people by going ahead and giving them leading-edge technology. We provide insights into their problems and what solutions would fix that, and that is the cornerstone of everything that we do. Then from there, we provide our capital allocation principle that I've talked about. We bring in our operational discipline and financial management, and that leads us to differentiated products for profitable growth. Everything we do is surrounded by our values, uncompromising integrity, which we've adopted from the early days of Hewlett-Packard and Agilent, accountability, social responsibility, and one Keysight. One Keysight means one person's going to go ahead and speak for the customer, and everybody is responsible for lining up behind that. You are responsible, if you're one of the members of our team, to make sure that Keysight is successful. When we had multiple divisions and two different products could solve the same problem, there would be a lot of fighting because people were paid on their individual results. It's not the case anymore because of this change. We shared this model. This slide is from years ago, back when we rolled out the company. And as you have probably read, and I spoke to many of you out there, we are at the point where we have delivered 4% growth in Q2 of last year, then 7% in Q3, and I'm only talking organic growth, 11% in Q4, and 16% in Q1. And that is very, very impressive, where we have a model, when we hit 4%, we take 40% of that to the bottom line with that very strong incremental. We're very confident on our cash generation, and the board has approved a $350 million share buyback program. As you know, we went ahead before and had a program that was more opportunistic. We bought back $62 million in shares, but we canceled or put on hold the $138 million worth of authorization because we wanted to acquire Ixia. Well, now we're in a position to start a share repurchase program that we think you will appreciate. This is our priorities for our overall capital allocation. First, to drive organic growth. Second, to delever. Okay, and Neil will tell you about that. Disciplined M&A. And last, return of capital. And number two, we said that we would go ahead and pay off our short-term debt of $540 million within 2 years. And within the last month, or after 9 months, we've paid off all of it. So we paid it off a year and a quarter ahead of time in less than 50% of the time than we promised. Our long-term expectations are rising, and this is real important. We are increasing our operating model 400 basis points, and that will give EPS growth at 10% or above. We're very confident that we can do this through the cycle, and Neil will talk more about it. But this is a big deal, increasing our operating model. And in summary, we've transformed for organic growth, and we've gotten to the point where we have a more balanced capital allocation strategy. We have a differentiated business model that you see on the walls that talks about how we lead the company and everything that we do. We are going after growth markets and achieving growth, which is very, very impressive, far above anything that we had expected when we started our company. And we're raising our targeted operating model to deliver more results to the bottom line. This is an exciting time, and with 22% market share, we have the opportunity to grow much further fast. With that, I'd like to turn it over to Jay Alexander.